and welcome back to the MLS, the Mortgage Loan Show. I'm your host, Meg Sahagian, and I am super excited to have back today Rick Sanchez, who's a private banker. And Rick has helped to secure over $500 million in funds for his clients. So we're so excited to talk to him today. Rick, thank you for joining us.
Hi, Meg. Nice to see you. Thank you for having me.
Nice to see you too. So we really want our listeners to understand a bit more about how to secure a loan, right? So one of the titles that we often see is mortgage originator. Could you give us some insight into what is a mortgage originator?
Sure. So, a mortgage originator, that's a person that's going to help a client um, throughout the process of obtaining a mortgage loan. Okay. So, this is a person that you'll be asking questions to, sharing your information, and then this person should be able to create some options for you or present some options to you. And then you guys can make an informed decision on what's the best mortgage loan available to you. And then this same person will then work with the bank or the lender, work with their processors, work with their underwriters to make sure that they review your information and that hopefully an approval is issued. And then at the very end, the mortgage originator will be the one that will go over the final paperwork with you to know what you should expect when you go and you sign. And also, more importantly, this is a person that you can be in contact even after your loan has funded. So if you have questions about your payments, if you have questions about, when I saw that the rates went down, how does that benefit or affect me personally? So this is a person that you can continue to stay in touch in regards to that mortgage loan.
Okay. So how would you recommend someone go about finding a mortgage originator?
So good question. What you want to do is first ask family and friends, right? I think we all want to do business with people that we know and that we like. And then after that, what you want to do is you want to talk to at least 2 or 3 mortgage originators. And yes, you want to obtain the lowest interest rate possible, but also you want to make sure that you do business with someone who's going to keep you in the loop of the process. Also, someone that you can trust to give you the best loan options available to you, not necessarily to the lender or to the bank. So make sure you ask questions and ask what their process is like, and if you can be in touch with any of their clients for just feedback.
Hmm. So it sounds like relationship is key, kind of use your gut instincts in terms of, can you have a candid conversation with this person? Can you be fully transparent? And is this someone you trust to kind of see you through the whole process?
Correct. One of the things that we did in order to build that trust, build that relationship with our clients, is that we created what's called a client success portal. And in this portal is a portal just for the client, so they can be informed of what the process is going to look like, what kind of documents are needed during the process. It also gives them an opportunity to just ask questions if they have them, and then answers will be provided.
That's great. So in this client success portal, is it pretty easy to use? I know you mentioned that it kind of brings you through the whole process. So is it pretty intuitive? If someone
It
maybe is not as tech savvy, they could still utilize it and understand it?
Absolutely. So what it is what we like to call a roadmap, right? So the very first thing that we do is you watch your first video. It's an introduction to our client success portal. And then from there, it'll be a video every major milestone, right?
Mm.
Your application is complete. So there's a video about that. Now that your application is complete and the file has moved on to the underwriter, what does that mean? There's a video about that. So it's just a simple step by step that they can follow. And what I like to tell my peers is whether you build a elaborate client success portal or even if you just put it on a one-page document, have something available for your clients, right? Show them what to expect and also have that open communication with them, because a lot of people are going to have questions during the process, and you want to make sure that you're able to answer those questions, or at least that you're available to answer those questions.
Absolutely. No, that sounds like a great tool and resource for folks, really, especially with the videos. Me myself, I would really appreciate that because I would feel as if someone was holding my hand throughout the whole process, and having a visual to it always helps. So I'm excited to hear about that. So can we talk a little bit about hiccups, right? Complications that can arise during a loan transaction. What are some of the biggest challenges that you've seen in loan transactions?
Sure. I think it's just two things. One, either a lack of communication upfront, right, of what's going to be expected, how long this process is going to take, right? Because as a homeowner or a potential homeowner or a borrower, you want to know what to expect, right? And really, although this transaction is very important to you, you can't just put your life on pause because you're doing this loan, right? So just knowing how long it's going to take so then you can plan accordingly in case you have to make a financial change. That's the second hiccup that I see often is that sometimes our clients, they go out and they make a major purchase. Well, make sure you talk to your mortgage originator first and say, I need to make this purchase. How will it impact my mortgage loan, right? Or here's another one. I've gotten a great opportunity to work for another company. How will this affect my mortgage loan, right? So anything that changes your finances, you want to make sure to communicate with your mortgage originator to make sure that it doesn't have a negative impact on your process.
Okay, that's great. So on average, how long does the process take?
Good question. So typically on a purchase, it takes about 30 days or less.
Okay.
Now, if the rates are very low, then that means that lenders are very, very busy, right? So it takes a little bit longer. Just more loans in the pipeline, it takes a little longer to process. So, but typically a purchase should be about 30 days or less. On a refinance, so if you want to lower your rate, or you want to take cash out to pay for that major event in your life, a refinance, that can take anywhere from 45 to 60 days. And again, if the rates are very low, then it can take much longer.
Okay. So the rates being low is usually an indicator of kind of an influx of activity. So you can
that's a great way to put it. That's a great way to put it, Meg. And I think I'm going to use that from now on.
If good, you can steal it.
See that the rates are low, then just think to yourself, okay, it may take a little longer, but look, it's going to be worth it, right? Because the end result will be a low rate.
Absolutely. So let's talk about refinancing a little bit. I think in this year of the pandemic, some folks are kind of falling on tough times, maybe looking to refinance. Could you give a recommendation on, for people, right? When it's time to really look into refinancing, and if so, how to go about that process? Where does it start?
Great. So what I tell my clients is first, think of what is the main objective of your refinancing, right? What are you trying to accomplish?
Mm.
So is it that right now you need a lower payment because that's really going to help you? Or is it, you know what, when I purchased the property, I was making less income than what I'm making now. And now I'm able to make more of a payment. Can I refinance into a lower term? Meaning, can I pay this mortgage off sooner, right? Or is it my son or daughter are getting married and I would like to help them with the wedding, or I would like to fund their college and I need extra cash. So think of what is the objective, right? What's your main purpose? The reason why I say that is because sometimes people are so focused on lowering their interest rate. They want a lower rate, right? But again, they don't really know why they want to do that, right? By lowering the rate, it might push your loan back to 30 years. Well, that might not be the best thing for you, right? Or by lowering the rate, now it's going to commit you to a much higher monthly payment and you didn't really think about your budget, right? So again, the rate is important. We all want to pay the least amount of interest, but what's more important is what is our goal? What are we trying to accomplish, right?
That's great advice. Absolutely. So going back to kind of the process and the folks involved in the process, we spoke about mortgage originators. So I'm curious to hear from you, if I were to go to a mortgage originator and they were to look to refer me to a realtor, what does that process look like?
Right. So what mortgage originators do when they have a potential buyer, and this potential buyer does not have a realtor, what we all do first is we look for an expert in the community that our buyers want to buy. right? Because we all know that in order to be competitive and to know what great deals are going to come on the market, you want to deal with a realtor who's well informed of that market. So that's what we do first, right? And then also personally, what I like to do is I like to talk to this potential realtor and see what their process is like. How do they treat their clients? How do they communicate with their clients, right? And what kind of track history do they have? And then after that, I like to refer to three different realtors. So our clients have, some options and they can do their own due diligence and their own homework and talk to these realtors. But that's what I do. I like to look for the expert. I like to interview them. And then I like to give three options to my clients.
Okay, that's great. And are there any tools on the internet where we could look up reviews of realtors or mortgage originators? Is there anything out there that could help us in this vetting process?
Of course, there is. So there's like the three or the two main real estate websites like Zillow or Redfin.
Hmm.
Uh, so all of those, not only do they have properties that you'll see for sale, but also there's a section there that will allow you to look at realtors in the area and mortgage originators in the area. And you'll be able to see what their reviews look like and also what kind of transactions they've done in the past. So those are some two good ways of doing your homework on realtors and mortgage originators.
That's great. That's super helpful. So, talking about securing a loan, right? There's a lot of misconceptions out there. Could you help clarify some of the leading misconceptions out there about securing a loan?
Sure. The biggest misconception out there still is that you need 20% down to buy a house, right? So there's a lot of options out there that allow you to buy a property without having to do the 20%. There's options out there that you can put as little as 3% down. Now, in the past, if you wanted to do less than 20, you had to obtain a government loan. Like it's called an FHA loan. And that loan took longer to process. It had these different guidelines and procedures that at times, quite frankly, turned off sellers, right? Because they thought, wow, they're going to use an FHA loan. This transaction is going to take longer than I expected, or I may have to do certain repairs and upgrades that I wasn't thinking about doing. So that's the past. Now, there's a lot of loans out there that you can do as low as 3% down, and that loan is just as good as a loan like a 20% loan. So that's one of the misconceptions that I still see out there.
Okay. Now, is there any difference in terms of, when you're looking to buy property in different states, right? Do different states have certain restrictions on how much money you put down?
No, however, there is a restriction of how large your loan amount can be
Okay.
without it having to become a different type of loan. So, um, for easy terminology, there's what we call an agency loan. These are loans that are backed by the government. Fannie Mae, Freddie Mac, those are easy, lower loan amounts. And then there's the jumbo portfolio loans. Those are loans that the government said, you know what, lender, bank, you can originate it, but that has to be on your books and you are 100% responsible for it, right? So back to the question about states, what each state, or more importantly, counties in the state, they determine what that loan amount is. What's that threshold before a bank or a lender has to make it a portfolio loan? So check with your local mortgage originator. If you're planning on moving to a different state or even a different county, make sure that they know what that loan amount is and what your options are.
Okay. Now, are there any incentives out there for first-time home buyers?
There's low down payment assistance. There's programs where even if you don't have a long history of credit, there's ways around that as well because they recognize that you haven't been a borrower for a long period of time. There's programs where even if you had some hiccups with your credit, call it a foreclosure or a short sale, there's still options out there for first-time home buyers and people with bad credit or with negative credit history.
Okay. So there's always a solution, right? Don't give up hope if you feel like, maybe your financial history isn't up to snuff.
Right.
There's definitely ways that you can work towards feeling confident about securing a loan, it sounds.
Correct. Completely agree.
All right, that's great. And so, given this year and the pandemic, I'm just curious to hear from you. What has the market looked like post COVID?
Wow, it's interesting, very very interesting. So right now, what we're seeing is that there is low inventory of homes out there, right? And buyers are still out there. They're looking for homes. I see that at times they get in a bidding war, right? And the reason why is, well, for one of the reasons is because the interest rates are so low. When you see that a rate is low, you automatically think, great, I need to take advantage of this opportunity because this low rate will give me a lower payment. And now I feel more comfortable with that price range or whatever the case may be. So it's very interesting that in this pandemic, even though there's a high unemployment rate, there's a lot of uncertainty with what's going to happen in our economy, that people are still buying. They're still looking for homes. And it's very difficult right now in some areas to actually purchase a property because of that high demand.
That's so interesting. It's funny because I think I would think the opposite, right? I would just assume that in this time there wouldn't be that many folks out in the market looking to buy homes, but it sounds
You
like
know,
people are still motivated to buy.
many of us in our industry assume the same thing.
Yeah.
When the pandemic hit, the economy didn't do well. And typically, when the stock market's not doing well, rates go down. Okay. So we all braced ourselves for a huge spike of refinances. We thought, great, we're going to be very busy with refinances. Purchases are going to slow down, but we're going to do fine. And actually, both happened. Rates were low, refinances came in, people continue to shop. It was a little mind-boggling.
Yeah.
To be honest, it was a little mind-boggling. And I get this question a lot, right? Where people think that the prices are going to go down for homes, and whether they are or they're not, I don't have that crystal ball. What I like to tell clients, friends, and family, I say, look, focus more on your job stability. Where do you think you're going to be 2 3 years from now? Because if you're going to buy a house and this is a property that you're going to live in, you want to make sure that you can afford that payment for 2 3 years. If the value goes down, who cares, right? Because this is a home that you're going to live in. And if you get yourself into a conventional 30-year fixed rate, very nothing risky, who cares, right? The value will come back up again. This is your home. This is a long-term investment. This is not something that you want to flip, right? So I tell people right now, if your job is stable, you feel good about your job, purchase. Don't wait on the sidelines, waiting for the housing to crash again to get a better deal, or waiting for that perfect home down the line. Just purchase now, get yourself into a home, stop paying rent, and then down the line, if you're ready for an upgrade, you can always do that. There's always options for that.
That's great. So when do you think is a good time to buy?
I think it's a good time to buy when you have your finances in order, right? So sit down, make a list of your budget, everything from utilities to groceries to movie tickets. Do that first. And then think to yourself, like I said a few minutes ago, how am I doing at my job? Is it stable? Do I see myself being there for the next 2 3 years? If the answer is yes, then start considering buying a home.
That's great. And so, if you kind of go through your finances and you create that type of budget spreadsheet, we'll call it, and you have a really clear idea of how much money is going out every month and how much money is coming in, what would you recommend in terms of, if we look at either monthly or annually, how much of your income should go towards a mortgage payment? What does that look like?
That's a good question. So we underwriters or mortgage originators, we look at your income and we say on your gross amount, about 45% of your gross income can go to a mortgage, right? To your taxes, to your insurance, to your house,
Mm-hmm.
about 45% of that. personally, that may just be a more conservative person than most, but personally, I think that's actually a big number, right?
Yeah.
Because when you think of gross income, you're thinking of income before your taxes, income taxes are paid, right? Before you pay your health insurance, before you pay all of that. So the true cash that you take home is a lot less than what you're earning, right? So what I like to do is create my budget. After my budget, and I think of my quality of life,
Hmm.
right? Where do I want to live? How many times I want to go on vacation? How many times I want to go to the movies? After I have all of that information, I think to myself, I should spend about 30% of my cash that is left over, 30 to 50%, no more than that, of the cash that's left over for a house. And then that way, I know that my lifestyle is not going to change. I'm still going to be able to save money because for a rainy day. And after a few years, if you feel, you know what, I've gotten a raise, or I don't need to go on vacation as much as I thought, or I don't need to eat out as much as I thought, well, then think about upgrading the house, right? Uh, think about buying a more expensive house, or think about just buying an additional house and as an investment for investment properties.
Now, would you recommend that someone, for someone who has extra cash, right? Would you recommend that they look to buy an additional property?
Of course, I do. Absolutely. So I would think that the vast majority of wealth in our country has been accumulated through real estate, right? But with that, a lot of risk and work is involved, right? You have to keep in mind that this property that you're going to buy, yes, it is a property, it is a home, but think about it more of a business, right? And within a business, you will have expenses, you'll have challenges, things will go wrong. So if you view it as a business and you're up for the challenge, then you'll do well, right? So I see a lot of my clients, and even me personally, my wife and I, we have rental properties. And when something breaks down, you can't get emotional about it, or about a tenant calling you and saying, listen, the sink is clogged again. Don't take the emotions out of it. This is just a business. This is just a hiccup that the business just is experiencing, and then address it, move on. If you
Yeah.
can do that, you will acquire a portfolio of real estate, and you'll do really well for yourself.
That's great. And I bet at the end of the day, even with those small hiccups from tenants about, fixing the sink or fixing light bulbs, things like that, it's still a great return, right? You still are finding a great ROI or return on investment with those
It
rentals.
is, of course, and that's the importance of working with a good realtor who will recognize those good opportunities out there, right? You don't want to overspend. Working with a good mortgage originator that will look at your finances and say, Meg, based on your finances, sure, you can take on this risk, right? Talking to a CPA and saying, thinking about purchasing a rental property, how is that going to affect me personally, or what should I do to be prepared? Because we can have an hour conversation about that. Because so talk to a financial advisor, talk to a realtor, talk to your mortgage originator, and then make an informed decision about it.
Okay, that's great. Well, Rick, thank you so much for your time. You have given our audience such great advice in regards to seeking out a mortgage loan and securing a mortgage loan, and really being able to vet the different folks that are going to be really important in making this just a smooth process. So thank you so much for your insight.
Thank you, Meg. It's always a pleasure, and it was great seeing you again. Take care.
Great to see you too. And real quick before I let you go, if anyone out there wants to get in touch with you, what's the best way to get in contact?
Great. So please visit successwithricksanchez.com. Again, it's successwithricksanchez.com. Thank you, guys.
Thank you so much, Rick. So that concludes this episode of the Mortgage Loan Show. If you want to check out this episode and others, head on over to www.mortgageloanshow.com and we'll see you there. Thanks so much.